Ladies and gentlemen, good day and welcome to Q1 FY25 earnings conference call of Dr. Reddy's Laboratories Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Risha Periwal. Thank you, and over to you.
Thank you. A very good morning and good evening to all of you, and thank you for joining us today for the Dr. Reddy's Q1 FY25 earnings conference call. We have with us the leadership team of Dr. Reddy's comprising Mr. Erez Israeli, our CEO, Mr. Parag Agarwal, our CFO, Mr. M.B. Narasimhan, our Deputy CFO, M.B. Ramana, our CEO for Branded Markets, and the entire investor relations team. Earlier during the day, we have released our results, and the same is also posted on our website. We'll begin the call with opening remarks from the management, following which we'll have the forum open for Q&A session. Please note that today's call is a copyrighted material of Dr. Reddy's and cannot be rebroadcasted or attributed in press or media outlets without the company's express written consent. This call is being recorded, and the playback and transcripts shall be made available on our website soon. All the discussions and analysis of this call will be based on the IFRS consolidated financial statements. The discussion today contains certain non-GAAP financial measures. For a reconciliation of GAAP to non-GAAP measures, please refer to our press release. Before I proceed with the call, I'd like to remind everyone that the safe harbor contained in today's press release also pertains to this conference call. Now, I hand over the call to Parag.
Thank you, Risha, and greetings to everyone. Thank you for joining the call today. I hope you have received a copy of our earnings release documents and press presentation uploaded on our website. It's my pleasure to present results for the first quarter of 2025. We recorded a steady performance during Q1 FY25 with a double-digit revenue growth and stable EBITDA margins and return on capital employed. For this section, all amounts have been translated into US dollar at a convenience translation rate of rupees 83.33, which is the rate as of June 30th, 2024. Consolidated revenues for the quarter stood at rupees 7,673 crores, which is US dollar 921 million, and grew by 14% on year-on-year basis and 8% on a sequential basis. The growth is mostly driven by the generics business in the US and recent in-licensing of Sanofi vaccine portfolio in India. Consolidated gross profit margin stood at 60.4% for the quarter, an increase of 170 basis points over the same quarter in the previous year and 183 basis points sequentially. The year-on-year increase is on account of favorable product mix and overhead leverage, partially offset by price erosion in generics markets. Gross margin for global generics and PSAI were at 64.7% and 23.1% respectively. The SG&A spend for the quarter is rupees 2,269 crores, which is US dollar 272 million, an increase of 28% year-on-year and 11% quarter-on-quarter. The year-on-year increase is primarily on account of continued investments in new business initiatives, increase in freight rates, annual merit increases, and building capabilities to enhance operational efficiencies. The SG&A cost as a percentage to sales were 29.6% and is higher by 330 basis points year-on-year and 67 basis points quarter-on-quarter. We expect our SG&A to be in the range of 27.5% to 28% for the full fiscal. Our in-house R&D efforts are further supplemented with collaborations to create a robust product pipeline for small molecules, novel oncology assets, as well as biosimilars to drive future growth. The R&D spend for the quarter is rupees 619 crores, which is US dollar 74 million, an increase of 24% year-on-year and a decrease of 10% quarter-on-quarter. The R&D spend is at 8.1% of sales and is higher by 68 basis points year-on-year and lower by 164 basis points quarter-on-quarter. Overall, R&D continues to be a cornerstone of our growth strategy and we expect the investment to be in the range of 8.5 to 9% for the full fiscal. The other operating income for the quarter is rupees 47 crores, lower versus last year due to a one-time settlement income in the base period. The EBITDA for the quarter is rupees 2,160 crores, that is $259 million, a growth of 15% quarter-on-quarter and 1% on a year-on-year basis. The EBITDA margin stood at 28.2% and is higher by 172 basis points quarter-on-quarter and lower by 357 basis points year-on-year. The net finance income for the quarter is rupees 84 crores as compared to rupees 78 crores for the same quarter last year. Profit before tax for the quarter stood at rupees 1,882 crores, that is $226 million. The PBT stood at 24.5% of sales. Effective tax rate for the quarter is at 26%. We expect our normal ETR to be in the range of 24% to 25% for the fiscal. Profit after tax for the quarter stood at rupees 1,392 crores, which is $167 million. The PAT percentage stood at 18.1% of sales. Reported EPS for the quarter is rupees 83.5. Operating working capital as of 30th June 2024 was rupees 11,555 crores, which is $1,387 million, an increase of rupees 262 crores, which is $31 million over March 31st, 2024. Our capital investment in this quarter stood at rupees 491 crores, which is $59 million. The free cash flow generated during this quarter was rupees 227 crores, which is $27 million. Consequently, we now have a net surplus cash of rupees 6,731 crores, that is $808 million as of June 30, 2024. Foreign currency cash flow hedges in the form of derivatives are as follows. US dollar is $858 million, hedged around rate of rupees 83.7 and 84.1 to the dollar, maturing over next 12 months with knock-in available, which allows participation when USD strengthens. Ruble 6175 million with minimum protection rate of rupees 0.899 to the ruble maturing in the next 6 months. Australian dollars 5.5 million at the rate of rupees 56.1 to Australian dollar maturing in the next 9 months, and GBP 458 million at the rate of rupees 1.267 against dollar. With this, I now request Erez to take us through the key business highlights.
Thank you, Parag. Good morning and good evening to everyone. Continuing the momentum of the previous fiscal, we have commenced FY25 on a positive note, with yet another quarter of highest ever revenues and stable margins. Our approach to growth continues to include both feeding new businesses and strengthening our presence within existing spaces in line with our stated strategy. Let me take you through some of the key highlights for the quarter. One, double-digit growth in revenues in Q1 at 14%. Reported EBITDA margins stood at 28% and annualized ROCE stood at 33%. Net cash surplus was $808 million. This quarter witnessed a significant milestone in building global consumer healthcare business with acquisition of Nicotinell and the second largest brand, as well as related market-leading brands in the nicotine replacement therapy category in markets outside of the US. The transaction is expected to close in early Q4 of the calendar year 2024, and operations will transition to us in phased approach. You may remember that another step taken towards building a robust consumer healthcare business in India was the nutraceutical joint venture with the global FMCG giant Nestlé. The JV operation is expected to go live soon. Strategic collaborations are an important part of our growth story. We have recently signed following deals. We licensed Takeda novel gastrointestinal drug vonoprazan for commercialization in India. We partnered with Novartis Pharma to distribute two of the leading anti-diabetic brands, Galbus and Galbus Met, in the Russian retail market. received exclusive rights from Ingenious Pharmaceuticals to commercialize cyclophosphamide injection in the U.S., collaborated with Alvotech for commercialization of their denosumab biosimilar candidate in the U.S. on an exclusive basis as well as in Europe and the UK. Merivio, the drug-free migraine management device, is now available in 5 countries, namely India, Germany, Spain, UK, and South Africa. Our CDMO Origin Pharmaceutical Services inaugurated the 70,000 square feet state-of-the-art CDMO biologics facility in Juno Valley, Hyderabad, India. On the regulatory front, in May, the US FDA completed a routine GMP inspection of 2 of our formulation manufacturing facilities in Nevada, Vizag, and issued a Form 483 with 2 observations. In June, the US FDA completed the GMP inspection of our API manufacturing facility in Srikakulam, Andhra Pradesh, and issued a Form 483 with 4 observations. We will address and resolve the issues within the stipulated timelines. We continue to be recognized for focused effort in ESG. We are the only Indian company to be featured in the 2024 list of Global 500 Most Sustainable Companies by Time Magazine and Statista. For the second consecutive year, we were named Asia Pacific Climate Leader in 2024 by Financial Times, scoring the highest among Indian pharma peers. We won the Master of Risks Award for Healthcare and Pharma at the India Risk Management Awards. Through these efforts towards sustainability, we endeavor to contribute to the well-being of our patients, our people, and our planet. Now let me take you through the key business highlights for the quarter. Please note that all references to the numbers in these sections are in respective local currencies. Our North America generic business recorded revenues of $463 million for the quarter, with a year-over-year growth of 19% and sequential growth of 18%. The increase was largely volume-led, coupled with higher market share in certain products, partially offset by pricing pressure in some key products. We launched 3 new products during the quarter, and we expect the launch momentum to continue in the balance of the year. Our European generic business recorded revenues of $59 million for this quarter, with a year-over-year growth of 4% and a sequential growth of 1%. The increasing base business volume and contribution from new product launches during the quarter helped offset price erosion. During the quarter, we launched a total of 12 products across markets. Our emerging market generic business recorded revenues of 1,188 crores rupees in Q1, a year-over-year growth of 3% and sequential decline of 2%. On a year-on-year basis, market share expansion and revenue from new products more than offset the unfavorable forex. In constant currency, the emerging market grew at 9.8% on overall business. We launched 17 new products during the quarter across various countries of emerging markets. Within the segment, the Russia business grew by 12% year-on-year basis and 10% sequentially in constant currency. India business recorded revenue of 1,325 crores rupees in Q1, a double-digit year-over-year growth of 15% Q1 and a sequential growth of 18%. The growth was primarily on account of additional revenues from the recently licensed vaccine portfolio from Sanofi and new launches. As per IQVIA, our IPM rank is 10. We have launched 13 brands this quarter, in addition to integrating Sanofi's vaccine portfolio. Our PSAI business recorded revenue of $92 million in Q1 of FY25, a year-over-year growth of 12% and sequential decline of 7%. The year-over-year growth was primarily on account of improvement in volumes as well as new product launches. We filed 11 drug master files this quarter. Our R&D investment this quarter stood at rupees 619 crores, up 24% on a year-to-year basis, driven by our biosimilar products pipeline. Development efforts across generics as well as novel oncology assets in origin. Further, we will continue to complement our in-house efforts with partnership and collaboration to develop innovative solutions. We have done 22 global generic filings, including one ANDA in the US during Q1 of FY25. We continue to focus our core business on generics, biosimilars, and APIs, while investing growth driver of the future in three areas: consumer healthcare, access to novel molecules, and digital therapeutics. We are confident that this strategic growth initiative, coupled with our disciplined financial management investment in our people and driving operational efficiency, will enable us to deliver sustainable growth in coming years. As you may all be aware, Parag Agrawal will be retiring effectively on August 31st, 2024, and would be like to devote his time for making meaningful difference to the lives of voiceless animals. I want to thank Parag for his 4 years of service to Dr. Reddy as a CFO and for the impact he has had on the company as well as our stakeholders. Parag is driving a strategic vision for the company, which has placed Dr. Reddy in a strong position for future growth. I am pleased to announce that MV Narasimhan, also popular and known as MVN, who is currently serving as the Deputy CFO, will take over as a CFO from August 1st, 2024. MVN has been associated with Dr. Reddy since fiscal 2000. He is already a member of our management council and a seasoned strategic and financial leader. Please join us in wishing both Parag and MVN the very best in the new journeys ahead. And with this, I would request MVN to say a few words, and then we'll open the floor for questions and answers.
Thank you, Ray, and greetings to everyone. I would like to thank Parag for his invaluable leadership and mentorship. He has been instrumental in Dr. Reddy's financial success, and I look forward to building on the strong foundation that he has created. I also look forward to meaningful engagement with all of you and this committee going forward. Thank you.
Yeah, we can open the floor for Q&A now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Participants also requested to ask not more than 2 questions at a time and to rejoin the queue in case of incremental queries. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Kunal Dhamesha from Macquarie Capital. Please go ahead.
Hi, thank you for the opportunity and congratulations on a good set of numbers. First one on the cash flow from operations, which seems to have come down meaningfully, despite our working capital is largely similar to the last quarter, right? So what is driving the sequential moderation in cash flow generation?
Hi, Kunal. Thanks for that question. The reason the free cash flow is a bit on the lower side is because of fluctuation in factoring. We do the factoring in various markets, largely in the US, depending on the interest rates and the benefit we get. And because of that, we have rolled back factoring a little bit in this quarter. But overall, the operational cash flow generated from the business is in line with the normal trend.
Sure. So it should pick up going forward, right?
Yes, absolutely. Yes.
Sure. And second one on the SG&A expense, while you have highlighted that we are incrementally investing, in the new horizon growth levers, etc., but there is a step jump in SG&A expense. So is there any one-off included in this quarter's SG&A expense?
So, I said that in my opening comments, Kunal, that in this quarter, as usual, we are investing in new business initiatives. There are also some one-offs, like increase in freight rates because of some route issues in the Red Sea. also a few one-offs and so on. And this is the normal fluctuation that happens from one quarter to another, depending on the sales and the level and the phasing of investment. Overall, we are confident that our SG&A percentage is going to be within the range of 27 to 28% for the full year. Yeah, this is pretty much normal. It's just quarter-on-quarter fluctuation.
And the percentage you described is including the amortization, right?
No, that's not material. That's the normal amortization of intangibles that we always have. The normal level of amortization is included. What is one-off, I would say, is a spike in the freight cost, as I said, and a few other one-offs.
Amortization, Kunal, will be primarily after we close North Star. It will not be relevant before we close it.
Sure. And one for Reddy is on the launch momentum in the US. I think you launched 3 products in this quarter, and I think our usual guidance is around 20 plus products, right? So are we on track to achieve that? And secondly, you also mentioned that we have roughly 25 to 5 filings according to us, right? So out of this 25, how many of these are expected to be launched in, let's say, next 2 to 3 years?
So the answer to the first part, yes, we are on track. How many exact first to file, anybody knows? I don't know exactly to tell you, Kunal. We'll come back to you. I don't recall the number on top of my head, but naturally few of them will be there. But I don't remember how many exactly.
Sure. Thank you and all the best.
Thank you. We have a next question from the line of Neha Manpuria from Bank of America. Please go ahead.
Yeah, good evening, everyone. Hope I'm audible.
Yes, please go ahead.
Okay, thank you so much. My first question is on the OTC piece. Now with the acquisition of the ART portfolio, the Nestlé JV going online, how should we think about the potential size of the OTC business, let's say in fiscal 27-28? How big do you think this business can be? Are there any more acquisitions or capital allocation that you see in the consumer healthcare business to make it larger?
Yes, so the OTC and consumer care in general is a focus for us. It's part of the. So I'm kind of thank you, Nia. I'm kind of building on your questions. We will have basically primarily 4 spaces. One are the B2B generics. The other is branded generics and innovation. The third one is consumer care, and the fourth is biologics. So that part is about a little bit more than about $320 million currently, spread along North America, Europe, India, Russia, etc. The North Star, the new acquisitions once come will be somewhere around the $300 million. So altogether it's $600 million plus. Growing. So naturally, it's going to be an important part of the business. Likely that we want to build on the platform of the North Star and to add more assets in the future. So we see it as obviously business that will speak in billions in the future, but there is no obviously. It will be very much depends both on the growth as well as our ability to buy more assets.
Do you think we can get to that $1 billion mark with the existing assets, with the Nestlé JV, with the NRT assets, and with Menolab's existing base by fiscal 27-28? Would that be a fair assumption, or do you think we need more to get to that $1 billion number?
So the $1 billion we will need to buy more.
Okay, got it. And my second question, is on the fourth growth lever that you mentioned, biologics. I think you mentioned Geno is a near-term opportunity. You also have a Batacep. If you could give us some color on the timeline for filing of these assets, And therefore, when should we expect launch of both these products?
You're talking about the denosumab?
They are on the access with both of them.
So denosumab is next year. And what are the other products that you are? Sorry.
Abatacept.
Nina? Abatacept should be December 26th, hopefully, and depends on the approvals or max beginning of 27, the calendar. So
December
December 26th or January
26th.
27. So refiling should be just year before that.
Sorry, Arez, I missed that. So you said Abatacept filing should be in
Abatacept filing should be the end of calendar 25. And
Got it.
launch
Okay.
should be end of calendar 26, assuming approval looks like.
Okay, got it. Thank you so much.
Thank you. We have our next question from the line of Ameya Sake from JM Financial. Please go ahead.
Yeah, thank you for taking my questions and congrats on the good set of numbers. The first question I have on the U.S. business, for the quarter, we have seen a good quarter-on-quarter jump, almost $50 to $60 million. Is it possible for the management to give some breakup how much would be contributing from the new product launches which we have recently done, and how much would be from the base business improvement? Thank you.
So most of it is from the base business. Most of it is the products that we had before, and the contribution of the three products to help the growth, but the lion's share of the growth came from products that we had before.
So going ahead, how should we think of the quarterly U.S. run rate? Is it normalized from here, or do you expect it to maintain at $450 million?
No, what I'm expecting from the U.S. Is to continue to grow. I kind of maintain the discussions that we had in the past. We have the capability, and I'm excluding even linazulemab, this kind of discussion to grow in single digits, meaning to compensate for any price erosion on year-to-year basis. That's what we did in the last 6 years, and this is what we are going to do. And from time to time, we have those upsides that come for first to market or specific situations. Right now, it looks like that our North America activity should continue to grow throughout the year. Quarter to quarter, it's hard to tell. It's always fluctuating. So I cannot guide on quarters, but I can absolutely say that we are planning to continue to grow throughout the year also.
Sure. The second question I have on the India business growth, which is around 15%. In the opening remarks, we said that some of it is coming from the vaccine business which we acquired. Is it possible to quantify how much will the base business growth?
Yes, so it's let's say without the vaccine, it's probably mid-single digits without it.
Sure. Thank you so much. I will join back with you.
Thank you. We have our next question from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the opportunity. Continuing on India, so just want to understand now, Sanofi vaccines contributing meaningfully in your India numbers. Is this the current base which we should assume, like you will be going from the base of 1Q in coming quarters? Or how should we look at India growth in near term as well as in medium term?
The baseline of India without acquisition will be double digits this year.
Okay. And this base business, you said it grew in single digits during the quarter, excluding...
It was mid-single digit, and it will be double digits for the year and for sure and for the next quarter.
Sure. And can you update us on Nestlé JV, how that is progressing?
Progressing very nicely, and we hope that in the beginning of August we can announce day one. likely August 1st, but we will announce it when it will come.
In August.
August 1st.
Okay. And my second question is on your biologics effort. So, can you let us know what is the kind of spend you are doing for this line of business? And you earlier mentioned meaningful sales could be starting from 27, right? So between now and 27, if you could just talk on the cost part for your biologics effort.
Yes. So on biologics, we have maybe just to frame what we call biologics in the company. We have biosimilars, which is about, I think, if I'm not mistaken, 20%? No, of the R&D. About 20% of the R&D and about 10% of the CapEx. This is on the. In addition to that, we are ready to scale up our CAR-T to launch in India, and we are working on that as well. We normally don't classify it. I'm assuming that you're asking me about the biosimilars.
Yes.
This is also very, very important activity for us. In addition to that, we are engaging in licensing for various markets. So we mentioned the denosumab already, but we have also local activities in which we are licensing products for a specific market, especially emerging markets. Likely that until the end of the decade, we will have a significant number of deals that we are working for those markets. And then after the denosumab, the next global products for us will be rituximab, of course, that we got recently approval of Europe, and we hope and we will get later in the year for the US, we will have abatacept, like I mentioned to Neha before, likely the end of 26, beginning of 27.
Okay. And all these products which are coming, say, in 26 and beyond, you will be marketing on your own, right? Or the way like previous two products had gone through partnership?
Besides rituximab, that is a partnership with the Fresenius. The rest is we will do by ourselves, including the United States.
Okay, then. Thank you. Thank you for your response.
Thank you. We have our next question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. So just again on the North America sales, on the base portfolio, maybe like ex-Revlimid, as you highlighted, the price erosion is in the range of high single digit. And despite that, the sales year-on-year or even a quarter-on-quarter, there has been a very reasonable jump. So just to understand if there was any specific product opportunity which would have, because of the product shortage or some competitor going away, or how to think about the base business and the sustainability of run rate.
So first, I did not mention the number that you're saying, so please don't quote me because I did not say it. Second, yes, it is going to be consistent, and we see that it grows. There is no particular product. It's actually multiple products, primarily because of great service that we are giving in the United States to customers.
Mr. Tushar?
Got it, sir. Yeah, got it, sir. And on the India-based business, the growth has been quite moderate, ex-NOC. So how do you think of scaling up this growth?
As I mentioned, the growth will be double digit even without the inorganic, and the inorganic will be on top of it.
All right. Thank you.
Thank you. We have our next question from the line of Surya Patra from Phillip Capital India Private Limited. Please go ahead.
Thanks for the opportunity and congrats for the great set of numbers, sir. So my first question is on the Origin biologic facility what we have inaugurated. So what is the kind of, how big is the investment there? And Also, wanted to understand, is it for the biosimilar pipeline what we have created by Dr. Reddy, or it is targeted towards the CDMO opportunity, what we would be thinking and that we have been talking? So if you can give some clarity on this.
Yeah, that specific investment is for the CDMO activity of the biologics crop origin. So that's the primary purpose of this. The level of investment is a few hundreds of crores. I don't remember exactly how much.
300 crores, you said?
Yeah, in terms of CapEx.
Okay. Is it backed by any generally CDMO business? Generally, many times we find that it is backed by some contract or some association or some kind of collaboration with the target party. So is it, as of now, currently backed by that? And when do you think that regulatory clearance of this plant that one should expect?
So it does. We do have contracts that pay for this investment. These are all early stage projects that comes from innovators. So it doesn't require now any specific regulatory activity. Naturally, if it will continue with this kind of traction, we will need to have a scale up and then discussion, and this will come probably later through the years. Right now, it's primarily for R&D activities, so it's more of the D of the CDMO rather than the manufacturing.
Okay. And my second question is on the volume share rise as per the settlement in case of lenalidomide. Whether you have seen that volume share rise which was indicated as part of the contract, sir?
The product is going exactly in accordance to the contract. The volume is impacting primarily by the type of agreement and less about questioning market share or anything like that. And so far so good. We are selling the product exactly in accordance to the contract.
Sure, sir. Just one small clarification. Regards the freight costing, what you have mentioned, Praksha. So, how serious and critical is this cost issue? So, for the quarter end, is it fair to believe that this is likely to continue at least in the next couple of quarters, the way the trade is happening US-China?
Yeah, so most of it is related to obviously the conflict in the Middle East. We need to circle Africa and in some of the cases because of the timeline we need to fly instead of shipping it by sea. So obviously this is a primary issue, so obviously I wish I could know by when this conflict will end. Hopefully it will end. But yeah, the impact is a few tens of crores. I don't remember exactly how much, but it's the impact.
Okay. Is it fair to believe that the point around 0.6, less than 1% kind of a swing sequentially what we have seen in ATA, large part of that is because of this freight cost?
I will not say large part. It should be around 50 or 60 crores, something like that. So I don't think large part. The main part is investment in capabilities, in new products, in new business initiatives. We are leveraging the fact that we have, if you recall our previous discussions, we want to be give or take. It's never that accurate. In the sweet spot in which we are delivering for the shareholders, but also investing in the future. So we are absolutely using the opportunity to invest more in the business, whether it's R&D or CapEx or new businesses. And the SG&A, if you wish, the lion part is that, but yeah, also freight costs and other one-offs are also there, like Parag mentioned.
Sure. Yeah. Thank you, sir. Wish you all the best.
Thank you.
Thank you. We have our next question from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Yeah, good evening, and thank you for taking my question. Just between and MVN, well, it's in, we're generating about 220, 230, 240 million per quarter in terms of cash flow quarter. We have a bit of a cash equivalent. We're going to pay for this NRP, which I think the upfront payment will likely be happening. But even after that, we seem to have lots of cash and cash flow generation. So just want to understand, in the next 2-3 area will likely.
I'm sorry, you're sounding muffled in between.
Yeah. So all I was asking about capital allocation and $1 billion of cash and cash equivalents and probably cash flow generation of 200 million per quarter. We'll likely pay for the NRP therapy coming up next, but even after that, we are going to have significant cash and cash flow generation. So the question is around the 2 to 3 years, what are the means, which are the areas we're going to likely continue to invest? I believe, Eris, in your comments on India, you said that excluding acquisitions, we'll grow double digits. So maybe in India, which are the areas we are likely to grow?
Yes, so thank you for the question. Indeed, a very important strategic question. First, we believe that we have about $2.5 billion that we can invest in organically. That depends, of course, on the time but we have enough financial capacity without even changing dramatically ratings or anything like that. Should not impact the rating at all. And of course, we want to invest in each one of the 4 spaces that I mentioned. We do want to invest in our B2B generics, in our innovation, in our consumer care, as well as in our biologics. The primary way to use it is less of mergers and acquisitions and more about collaborations, licensing, and from time to time we will buy also assets or rights to the assets. So our preference is to have access to products that are complementary to our portfolio, that allow us to be in a very comfortable strategic position in each one of the segments, in each one of the geographies. Largely, we are aiming for a high level of IRR and for sure better than the cost of capital that we have for the company. In addition to that, we are using the cash for internal activities, so we are investing in CapEx, especially in the capability like biologics and CDMO and our injectables. We believe that we have a very interesting pipeline for the future, primarily contained of injectables and primarily many peptide products. So this is where the capital allocation will go, and we are building the growth of the next 5 years, 26, 27, etc. as we speak, and we are using the relatively comfortable financial positions that we have now in order to invest and to build that position into the future. Hopefully it addressed your question.
Yeah, thank you, Eris. Thank you for that. Just one follow-up. In the past, in terms of deals in India, valuations have been a hurdle. Do you think our philosophy will likely change now if we were to look at transactions in India? Recently, many of your peers have done, can I say, high valuation acquisitions. Is it something that Dr. Reddy will be also willing to look at?
We are looking at all the deals in India. So let's just to be very clear, India was, is, and will be forever a very important market for us, and for sure a very important country for all the activities of Dr. Reddy's. India is absolutely a focus, and we are going to invest in India. We feel that the fact that the branded generic market is now single digit, plus the cost of capital went up over the years, presented a situation that if you have a cash transaction, we don't see a reason to buy EBITDA in which only the interest that you pay to the banks will be more than the EBITDA that we'll get. So this kind of a transaction we will not do. If the deal is better than our cost of capital, absolutely we'll do it, and India will be absolutely a priority.
Got it. Thank you. That's enough.
Thank you. We'll take our next question from the line of Abdul Qadir Quranwala from ICICI Securities. Please go ahead.
Hi, thank you for the opportunity. So my first question is pertaining to the vaccine business, what we have been licensed from Sanofi. So could you help us understand, how the growth profile has been in this particular segment, and what are the kind of investments you will have to do to grow this business?
We acquired this business from Sanofi as what we call the bridgehead. It's an anchor product will allow us to bring to this segment in the future additional products. So when we identify a space that we want to claim, we are trying to build what we call the anchor activities that will allow us the capability, whether it's product management, whether sales force, whether know-how of the product, etc. So the intent is to grow it in the best way we can, the current business, but to add on it over the period of time, additional products that will come from licensing in from other companies.
Okay. So, have you also taken some MRs which were originally pertaining to Sanofi who would be now being our payrolls, or how is that arrangement here?
We got also the salespeople from Sanofi.
Okay.
Thank you. We have our next question from the line of Janil Shah from JM Financial. Please go ahead.
Hi, thank you for the opportunity. So my question is related to the NRT acquisition. So Aeon in their press release have mentioned that the gross assets related to the acquisition are 413 million pounds. So if you can explain why is it so high, and is it fair to assume that a large part of this would be goodwill?
Lisa, I did not personally see the Aeon's balance sheet, so you probably need to ask them. I'm assuming that it's mostly intangible.
Okay. Thank you, sir.
Thank you. We have our next question from the line of Kunal Dhamesha from Macquarie Capital. Please go ahead.
Thank you for the opportunity again. I just wanted to understand, has there been any business impact on the Microsoft outage that was there last week for us?
No, zero effect on us.
Sure. And secondly, on the Nestle JV, I didn't understand what will start from August 1st. I think we have incorporated JV as of now, but you are saying the operational activity will start from August 1st?
Yes, so we, the day one is the day in which the JV will work together, and whatever we record what we had until now, plus what Nestle used to have before that.
So it's basically, adding our current products like Salavida, etc. into the JV is the way to understand it, right? And then
yes,
Nestle's product. Sure. And then I think the initial activities is to kind of, customize the product, Nestle's product, global product for Indian market, etc., right? For that, we'll have to invest. So this investment will be part of P&L investment, or would this be more like balance sheet investment, which will capitalize till we commercialize those products?
So let me clarify, maybe. First, to your first part, yes, the product Accelerida and the other products that we have, we will add to it the Nestle activities, and both of them will be part of the JV, starting from August 1st. As related to investment and all the stuff, the intent is over time to bring additional brands, primarily from Nestle, to the JV, and to introduce them to India and to grow them. Specifically, at the very beginning, I don't anticipate impact on the P&L, for sure not in a significant way.
Sure, that's very helpful. And the last one from my side, I think we also undertook the expansion of our biologics facility. Right. So is that complete now, and is that completion, if you can help with the current capacities, is it more than enough to cover us for the next 2-3 biologics or biosimilar that we have in pipeline?
We are still investing in our Bachupoli facility. The intent is to become something like 50 kiloliter in that facility. This probably will take us additional 2 years to reach that level. So you're going to see additional capex in Bachupoli, at least for the next 2 years.
Sure. And 50 KL is the aspiration, like the future capacity. What is the current capacity?
I think 1.5, if I remember, 15 KL.
15 KL to 50 KL. Perfect. Thank you and all the best.
Thank you. As there are no further questions, I would now like to hand the conference over to Ms. Richa Periwal for closing comments. Over to you.
Thank you all for joining us for today's evening call. In case of any further queries, please get in touch with the Investor Relations team. Thank you once again on behalf of Dr. Reddy's.
Thank you, members of the management team. On behalf of Dr. Reddy's Laboratories Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.